The XRP market is currently experiencing a significant phase of development, marked by recent institutional activity and upcoming ETF launches. The most immediate update comes from the Bitboy XRP ETF, which launched with notable early figures. The ETF recorded $25.7 million in trading volume and $107.6 million in assets under management, with a management fee of 0.34%. Temporarily reduced to 0% for the first month on the first $500 million in assets. These numbers indicate meaningful institutional engagement and provide an initial framework for capital flow into XRP. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we'll talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember, this is not a financial advice video. Looking ahead, the XRP ecosystem is expecting the launch of larger ETFs from Franklin Templeton and Grayscale. Franklin Templeton, in particular, is over 40 times the size of many current ETF providers, which signals the potential for significant liquidity entering the market. Despite these developments, XRP's price has not experienced immediate upward pressure, largely due to broader market conditions. The market is currently facing limited buying activity coupled with ongoing selling pressure, and overall liquidity remains constrained. This dynamic highlights the difference between fundamental progress and short-term market sentiment. Recent macroeconomic signals also play a role in market behavior. Expectations for a December interest rate cut have risen to nearly 70%, suggesting future stimulus could inject additional liquidity into markets. Until that happens, price movements are largely driven by emotion and sentiment rather than structural factors. Negative sentiment can often amplify selling pressure, but these temporary reactions do not diminish XRP's underlying strength. From a fundamental perspective, XRP continues to exhibit a number of structural advantages that support long-term growth. Ripple's U.S. bank charter applications, Evernorth and Prime brokerage initiatives, and ISO 2022 readiness establish its alignment with major banking standards. Over 300 banks, including global players, have publicly confirmed testing or integrating Ripple's network, which highlights institutional adoption. The RLUSD stablecoin, backed by major custodians and compliant with regulations such as MiCA and NYDFS, adds a layer of regulatory and operational confidence. Technical and ecosystem upgrades further reinforce XRP's positioning. Enhancements to the XRPL include smart contract functionality, automated market makers, AMMs, sidechains, and decentralized finance integrations. On-chain data indicates whale accumulation, showing that larger investors are positioning themselves strategically while retail investors rotate out. Expansion into the Middle East and UAE continues through new licenses and payment corridors, and CBDC interoperability is being tested through pilot programs with central banks. XRP's network has a strong operational history, boasting over a decade of uptime without major security incidents. Its fixed supply mechanism introduces scarcity, making it deflationary in nature, and its high-speed, low-cost transaction capability outperforms legacy cross-border systems such as SWIFT. The network's infrastructure is increasingly relevant for tokenization of real-world assets, attracting the attention of institutional players seeking secure and compliant digital asset solutions. Institutional participation is becoming more visible. Over 1,700 non-disclosure agreements referenced in court documents suggest substantial engagement from enterprises considering integration with the XRPL. Regulatory clarity, coupled with the expected market growth in cross-border liquidity solutions, positions XRP as a neutral bridge asset essential for global financial infrastructure. Other supportive factors include potential macroeconomic stimulus, the expected entry of additional ETFs by major players like BlackRock, and the rising total value locked, TVL, across XRPL-based protocols. XRP's leadership team, comprising professionals with experience in finance, government, and technology, adds credibility to these initiatives. Combined with global adoption and ecosystem expansion, these elements suggest that XRP is structurally prepared for significant growth once market liquidity improves. While short-term price fluctuations remain a reality, the fundamental case indicates XRP is in a strong position for long-term institutional and retail adoption, driven by utility, compliance, and network scalability. In conclusion, XRP continues to demonstrate resilience amid market volatility, supported by robust fundamentals, institutional interest, and expanding real-world applications. Its infrastructure, regulatory clarity, and strategic positioning as a bridge asset set the stage for future growth. While short-term price movements may fluctuate due to liquidity constraints and market sentiment, the underlying ecosystem strength remains a clear indicator of XRP's potential to perform in the coming years. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.